Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi currency analyst, and today is Monday, April the 16th. The pairs we're going to be looking at this week are the dollar yen, the euro pound, the pound dollar, and the dollar loonie pairs. So let's start with dollar yen. We can see the pair is looking slightly bullish at the moment. We can see the RSI is above the 50 neutral level, so we do have that slight risk to the upside. The pair had been in a slightly downward sloping channel before breaking above that channel, and now we've got this ascending trend line in the short term, providing support for the pair around around the 107 level at the moment. If the pair was to break below that trend line, the next support would come from the 50-day moving average around 106.60, and that's also just above the 20-day moving average. Further down, we've got the 106.10 level. That's been previously a congested area. Below that, we've got 105.65 as another potential support before the pair would potentially reach that 16-month low of 104.62 we saw back at the end of March. But if the pair was able to strengthen its upside momentum, we could see resistance coming from 107.90. First, though, it would have to break above 107.50, so that's the immediate resistance area for the dollar yen, and then if it manages to break above the 108 level, we could then see resistance coming from around 108.70. In the medium term, though, the pair, the outlook for the pair remains rather bearish, though there do seems to be some early indications that the pair is bottoming out, and we are potentially moving to a slightly more neutral outlook in the medium term. Let's now turn our attention to euro pound. Euro pound has been in a slight downwards sloping channel in the medium term. It hit the bottom of the channel last week when it hit a 10.5 month low of 0.8627. So that the lower bound of that downward sloping channel is at the moment providing support for the pair. If it though does manage to break below that the bottom trend line, we could then see support coming from the 0.86 handle, and then we could also see below that 0.8550 and 0.85 handle acting as further support levels to the downside. And that is possible given that the RSI at the moment is in negative territory, though it has just crossed into oversold levels, suggesting that the pair could potentially be reversing, especially as it's still finding support at the bottom of the channel. If it does move higher, we could see resistance coming from the 0.87 level, but euro pound would need to climb further up to at least 0.8790. That's another previous resistance level, and that would take it closer to the 50-day moving average, helping shift the short-term bias at least to more bullish one. Moving now on to the pound dollar. The pound dollar has hit near 3 months high this morning, above the 1.43 level. The short-term bias is clearly a bullish one. RSI is approaching the 70 overbought level. If it does cross into that territory, it could signal a downside reversal, but for now things are on the up, and then we could see the next key resistance coming from the 161.8% Fibonacci projection of the up leg from 1.4244 to 1.13965. Before that, though, it would have to break above the January's 1.5 year high of 1.4344. But if it does lose steam in the short term, we could see support coming from the March swing high 1.4245 around that level there, and then below that we could see support coming from the 50% Fibonacci retracement at around 1.41, which is also near the 20-day moving average. A drop below the 20-day moving average would shift it towards the 50-day moving average, and that would put the current bullish medium-term outlook at risk. We had seen the medium-term outlook coming at risk back in February, where prices were hovering around the 50-day moving average, and now once again we have quite a bit of a gap between price action and the 50-day moving average. Though if it does fail to break above the January peak of 1.4344, we could then see the outlook moving to a more neutral one once again. And our final pair for today is the dollar loonie. We could see at the moment dollar loonie is looking rather bearish, though if you look at the stochastic oscillators, we are seeing an attempt for an upside reversal with the percentage K line rising above the percentage D line, having entered oversold territory. We do have support at the 61.8% Fibonacci retracement of the upleg from 1.2248 to 1.3124, but we are also seeing the 200-day moving average capping prices at the moment around 1.2620. A break above that 200-day moving average could then take prices to the 50% Fibonacci retracement at 1.2686, and then above that we have the 50-day moving average and the 38.2% Fibonacci at 1.2789. A climb above that level would help strengthen shift the outlook to more a bullish one, but for now the risk is clearly to the downside. If it breaches the 61.8% Fibonacci, we could then see the next support coming from the 78.6% Fibonacci at 1.2436, and then a drop below that level would take prices towards the 4-month low 1.2248 from back in January, and then that could shift the current
neutral medium-term outlook to a more bearish one. We can see prices have in fact been consolidating since September last year. That's it from me. Thank you very much for watching and have a great day.